Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a daily Forex market breakdown for you on January the 22nd, 2020, and we're going to discuss the current state of the major currency crosses around the globe. Before we do that, we want to get to our disclaimer just to remind you that this is for illustrative purposes only. And with that, we can now jump to our live screen here at www.forex-trading-unlocked.com, and I already have the workstation page pulled up, which you can access from this upper menu bar up here. And we're going to toggle down. We're going to go past our economic calendar. There's really not too many numbers we need to be paying attention to. Now we have the US dollar Mexican peso trade up here already set for you, and the reason why is to show you how this is a little chart buster. We have on the monthly, okay, what's going on here with there we go. Okay, I think this will work. Oh, we're not getting a trend line. What do you know? Oh, there we go. All right, so anyhow, we have this trend that the market has been going in a very consolidated but still holding the upward trend for this market, which has been in a very strong bull trend for quite some time, especially if you look at it going all the way back to 2009 when the peso was back down by 11 pesos to a dollar, where it topped out at 22 back in, January of 2017. So since then, the market has been kind of just going sideways, bobbling around between this $20 and 19 or 20 pesos and 19 pesos. But now we're trading pretty much on the lows. So this is a monthly chart showing you how steep that this is. And then here we're going to pull up the daily chart. So the daily chart obviously has been trending lower, and right now, does it look like it's rounding a bottom? It does kind of look like it's rounding a bottom on the daily, but I think if anything, you're looking for a correction like this before it continues to trend lower, because that monthly chart was looking really bearish. So if you're looking for a currency cross that's trending right now for sure, and looks to have, like, it's going to have some opportunities for long-term trend traders, I would look at the US dollar Mexican peso currency cross. So with that, we're going to go look at the euro US dollar and see how that's shaping up right now at the mid-morning trade. So before it was lower, it had made a newer move low, and now it is positive on the day. So the dollar index was gaining strength for a while today, and now it looks like it's starting to get to fall back again as the some of the major currency cross rates, like the euro, now is turned around, and the British pound has already been higher all morning. So with this, let's see where we're at. We have made a lower move low today. However, we did not take out this lower move or higher move low that has helped to hold and maintain this trend. So I think that this will be our directional bias pivot for the rest of today's trading day, and then going also into probably the next couple sessions as well. So if this holds right here, this past higher move low, then that gives credence to the trend remaining strong and then holding up for a nice bullish move back up towards this 111.5 up to $1.12 even. Now remember, the market's at 110.89, so it's not like we're looking for any major move here. We're looking for at least a correction higher to maintain the sideways trade, because look at this market. It's been in a pretty much, let's use a different color here to make it a little more obvious. It's been in pretty much a range trade for quite some time. So right now, as you can see, we're just pressing the lower boundary of this range. Does that mean that we're not going to continue lower and the bears are not in control? I don't know. We'll see. I mean, right now, fundamentally, there is a reason to be have some weakness in the euro, and that will be because of the Italian issues with the Italian government and their debt issues and a couple other economic fundamentals that are coming now out of the Italian piece of the EU. Remember, the EU is a union of many countries, and right now Italy, which is starting to show some signs of weakness, is coming to the forefront of the news. So we'll probably see some pressures. It'll probably keep the bulls from getting too much momentum to the upside, but right now it looks like it's trying to bottom and at least hold the range. Remember that we do have Brexit coming up Let's move these arrows over here. We're going to put something to make this a little clear for you, that the Brexit deadline for the first initial move out of the EU is on the 31st. Make this a little bit bigger for you so you can see this right here. So as we head into this time horizon right here, it's very likely that this market might start to consolidate and settle into a range trade. So just because it's going to, usually as we've been heading into Brexit deadlines, the pound more than the euro, but both of them start to settle in. It's kind of like a central bank. Now that's also a key thing that we'll get to when we get to the pound, is about the central bank information as well. So we do know that Brexit here is coming up. It's a good chance that we're going to probably start to bottom, not necessarily become a bull, but start to consolidate. That's very likely. Now the ranges haven't been that big, and that's in the midst of a lot of news. So we'll see what happens, especially if the dollar starts to lose ground again against the other currency crosses, then you can probably see guarantee to see a little bit more of a lift to the bullish side than the bearish side for this currency cross. So right now, key off this $1.1066 pivot right here, this last higher move low, which maintains the upward trend bias, and only a failure from there would have us targeting newer move lows. But I wouldn't get overzealous as a bear either. I don't think you have much room to the downside as a sell-off. I think if anything, you have a better opportunity right now as being a long, getting a corrective move at least back up towards this 111.5 as we head into Brexit, and then we'll see what happens after that. So let's look at the British pound, US dollar, which this has been the currency that has been leading the charge today as far as being higher against the dollar. So this move, the trend is obviously overall in a nice upward to sideways trade right now currently, but recently it's been kind of going into a very quiet, tight trade. Now the British pound typically, in a day like today, this is a little extreme compared to the recent past because it's been trading in such tight ranges. Now once we do get a movement such as this, and now here's the thing that we have to look at, let's blow this up a little bit easier for you to see. So fundamentally, when it comes to technicals, when you make higher move lows and higher move highs, then you have what? You have a bullish trend no matter what going on. So here we had set this low over here. Let me make this a little bit clearer with the little circle right here. This had been a question, this low right here. So we didn't know, was this going to be the higher move low after this higher move low, or was this the beginning of a downtrend where this was a lower move high, this is a low before we start to set a lower move high and break. It looked like we were going to slide. All of a sudden we turned around, so that's why we're using this low right here as our downside bias at $1.2964. So let's get a downside arrow right here. So this pivot right here, this last swing low, this is our bearish bias and our risk level for being bullish. The reason we're bullish is because we took out that last swing high. So with that being said, we have this little move right now, higher move highs, which fundamentally on a technical aspect means that we are now becoming bullish. Now this is going into Brexit, so odds are we are going to have a quieting down of the trade going into the 31st of January. But this leaves us with a positive neutral bias, because the way we were leaning on support, had we taken out this past low over here, that would have been bearish, and we would have been targeting this last higher move swing low that was holding up the trend back here from, when is this, back in from December 23rd, so that was the Monday before Christmas. So right now, definitely our expectations still are overall a sideways trade, but the bias is with a sideways to higher outlook for the next at least session or two as we head into the trading week. All right, so that is our bias for the European currencies. Now remember, the euro had been lower all day until recently, and now it's gaining ground to the upside. So the dollar index had been stronger earlier and now is starting to wane. Let's see what's going on with the US dollar Swiss. This is one that had been weak against the dollar, having more follow through. As you can see, it spiked up higher today. And now it's not that much higher on the day. So the question is this market falling, or is it starting to bottom? Well, I think no matter what, you have to still keep your bias with this 96.13 as your downward trend pivot. Any failure from there keeps the trend intact for sure. Now this has been a very steep downtrend, so for it to base for a little bit before it goes lower, because it is a bull, the Swiss is a bull against almost all currencies right now. So the odds are of it keeping this 97.61 pivot intact, I think, are pretty strong. I don't think you're going to get a correction above there. Only a really strong rally in the dollar excuse me, would be indicative of strength that would give this correction more of a push. Even still, I think that if you do get a breakout above this 97.61 here to the upside, then that would be still a corrective move, looking for a failure probably around this 98.5. I think this would be the extreme. We failed at parity a while ago, and that was one of the major signals that gave us the rationale that the longer term perspective for the Swiss, no matter what, is very bullish against most currencies, especially the dollar. So the flight to quality right now around the globe is definitely the Swiss franc. So now let's look at the US dollar Canada, which also today all of a sudden set an interesting move, because it had been going pretty much sideways for the last 9-10 sessions. Today it tried to spike lower. It was holding the bottom part of the range, and then all of a sudden, boom, it came up. Dollar strength came into the market, and this is one of the markets where it really started to show. So there was a breakout here of this last swing high, which was a lower move high. So now this takes us off of the completely bearish forecast. It's still long-term bearish, but it's neutral. So it's a little bit right now in a corrective phase. It took out this high. We're still looking at it as a neutral to bearish market, so this is pushing resistance, and we're not really looking for too much more to the upside unless the US dollar really starts to gain strength. Then that would probably help to give this move another another gush, and probably get up to this $1.32 half area up here. But right now, it's hard to say that we're going to really get too much of a follow through because of the consolidation factor here. I think it was more like the stops got hit, it took out this high, and now here we're just kind of holding. And these other currencies, they're rebounding versus the dollar. So if that's the case, then you can probably guess that the bears are going to start to come back in this currency. So I'd be very cautious if you're a bull and keep your stops tight. Now let's look at the US dollar Japanese yen trade, which this market has been a trending bull for quite some time, and it had a nice sell-off yesterday. I think that's mostly because of the coronavirus scares that's going on around the globe, which are definitely valid for everyone to be worried about. But it looks like things are calming down and things are under control. So I think you're going to see a consolidation to continue here in the US dollar yen as it buffers below these new move highs and starts to try and pressure all new highs. Now, how high are we looking at as a target? Well, I think that if you can take out the recent high from a few sessions ago up here around $1.1028, that we will get a breakout that targets around $1.12, upwards of $1.13. Now, this is not going to be something that I think is going to just explode. I mean, we had a nice rebound here that brought us back to these highs, but we've been grinding through these highs, so we haven't really been able to breach them very quickly. So I think we'll get a little spark, a little pop, get up to about $1.12, consolidate, and then continue to do the same thing again as the bulls maintain their momentum in the US dollar yen. And this is no matter what happens with the dollar index. So if a strong dollar index would help to fuel this US dollar yen rally and probably help to breach further resistance, pressing newer move highs. And then there's the question of if the dollar index does take a little bit of a hit or a turn, then I think you're just going to see the US dollar yen rally slow down. I don't think that you're going to see that this market would actually correct again in a big way. The way it came back off of these lows here, like look at this here, just 2 weeks ago, it set these lows and then just accelerated all the way up to breach this resistance and start to set this trend higher again. So with that kind of strength, I have to say that this market is for the currency crosses is a very strong bull, just like the Swiss is, but the Swiss is a bull against almost all currencies out there. This is the one where the US dollar happens to be maintaining its bullish posture. Now let's look at the Australian dollar, US dollar, same trade zone to see what's going on. We have, let's see, we have A nice little continuation of the downtrend today. We made another lower move low. We took out these. So this is looking kind of neutral to bearish for the short term no matter what. The overall trend had been neutral to higher. Now we have to look at it as being more of a sideways trade, at least right now. It's pretty weak. So the Australian dollar is definitely not giving us any real reason to be a bull. So we're going to use this last swing high as a upside breakout pivot at 69.33. All trading below that, I think, keeps us in a bearish posture. So unless you have a reason to buy, get a signal, I would be very cautious as a bull. If you're a bear, I don't know how much you have to the downside. I think your next key support area is going to be this 67.97 area. And this might be an area where the Australian dollar starts to run into a lot of support and have a little bit of a problem as far as trying to continue the bearish sell-off. So I think we'll have to watch the dollar index. Once again, this is another one where if the dollar index continues to pressure resistance and continue higher, expect this trend to continue to buffer support. And then if we get a excuse me, a turnaround in the dollar index where it starts to sell off, especially in an extreme way, then I think you might get a little lift and a continuation of the Australian dollar, US dollar rally that was going on all the way up until the beginning of the year. Remember that the month of January, that this market has been correcting for 3 weeks now. So the question is this just a corrective move, or is this the beginning of a bearish reversal in the Australian dollar, US dollar? So that remains to be seen. Right now, it looks like we're more at the bottom of the longer term correction. And if that is true, then we should be looking for the next opportunity to buy would be a very good spot to probably get in on the next leg higher that could probably bring this. I mean, right now, if we can find a bottom between this 68.42 area where we're trading now and somewhere above the 67.97 area, if we can hold here and bottom here, you're looking at a rally that would target at least this upside pivot at 69.33. And if we did get above that, then you're looking at taking a run at the last higher move high up here, which would be maintaining the upper bull trend altogether. So the question is, can we get that going? I don't know. We shall see. This is going to be an interesting swing trade, I think, that we'll be developing. Now let's look at the New Zealand dollar, US dollar trade, and see what's going on here. This one is another market that had been a very strong, let's see, New Zealand dollar, US dollar trade. This had been a very strong bull. Let's see what's going on here. Now today it's not that weak. It's a little bit lower on the day. It looks like it's trying to bottom. So this is another one. Let's key off X, and I would use this last swing low now is our definite line in the sand for direction. I think that as long as we stay above it, we look for a buying opportunity now and a turn in the dollar index. So let's wait on this one. There's really not much to work with on this one. So we looked at the Mexican peso to start the day, but the euro US dollar is the trade where we want to come back to again and see how it settles today. It looks like it's trying to be positive. This is another one of our little trades. I think right now you have a low risk as a bull. I would risk this last swing low here or somewhere around here, around this pivot here at $1.1052 to $1.1066. But really $1.1065, $10.66 I think is your line in the sand. We were already looking to get long over the past couple sessions. So let's see how this trade holds up and see if we can ride it higher. If you want to know when our next video is coming out, subscribe to our YouTube channel at YouTube. Just search Forex Trading Unlocked and subscribe, and you will get notified when our next video comes out, because we will be watching this trade as it sets up and probably look at it tonight and see how it's emerging going into Friday. We might have a little weekend trade that sets us up for a nice move going into the new week. And if you are looking to find any reasons how to buy and sell the market, here's a book you can read called High Probable Japanese Candlestick Patterns, which is available on paperback and in Kindle version on Amazon.com. And through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. So I am Teddy Keckstedt from Forex Trading Unlocked, and please check us out on YouTube and see our other videos, and come back and see us again, because we're going to have a little follow-up trade scenario for you after today's close and see what's going on with this euro US dollar. All right, have a good one. And